Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is August 29, 2022. I'm going to take a quick look at the Forex market as we start the new trading week after Jackson Hole. I went through Jackson Hole in my weekend Forex video. I will include the link in this post. But let's take a look at some of the currency action in the early part of the North American session. Looking at the euro versus US dollar, we are seeing the euro versus US dollar move to the upside. We did move lower earlier in the day and follow through on the selling from the Jackson Hole Summit. We closed, if you recall, on Friday right near the 100-hour moving average. Had a decision to make, either higher or lower. The market tried to go lower, but ran into support against our low prices from last week's trading and started to rotate back to the upside in the late European session. London traders are off today. The price started to move back above the 100-hour moving average, and that led to some short covering, it seems, and we've moved back up to the 200-hour moving average. This is a key level here, folks, at par 17. We're currently trading right at that level. We recall on Friday after the PCE data, the market did move above that level, moved above the 38.2% retracement, and that will be the next target on a further move to the upside. Actually, we don't need to get above this high as well. Thursday's high, and then we look toward the 38.2% retracement. But we could also find, or we should find, some cause for pause here at the 200-hour moving average. We will see. Let's take a look at the dollar versus yen, and this currency pair moved higher in trading here today. If we take a look at the daily chart, we moved up to test the high prices from the month of July. That high here came in at 138.87. This high came in at 139.38. So there was room to roam, as I mentioned in my weekend report. And we did move up into that area against these swing highs, but we're seeing a little back off here. If I were to just put a Fibonacci retracement from Friday's low, which bottomed right near the 200-hour moving average off the PCI data, the 38.2% retracement comes right near this old swing area. This goes back in time, okay, way back here. It was a swing low and a swing high. As you can see, it dissects sort of a ceiling and a floor. And so this area right here at 137.91 would be a target. It's still 50 pips away. Big moves in the dollar versus yen of late, but we are seeing a little bit of corrective action here. Take a quick look at the 5-minute chart. A little more bearish bias here as a result of the break below the 100 bar moving average on the 5-minute chart. Keep these levels in mind if the market should move back above the 100 bar moving average. It would negate some of this bearishness that we're seeing here. Again, if I put the Fibonacci retracement from our low to our high right here, the 38.2 is down here at 137.91. That's the same level as this level right here. So watching this 100, 200, and 5-minute chart to give us some intraday clues for that currency pair. The sterling versus US dollar, this currency pair is also moving to new highs here after breaking lower on the daily chart and trading to the lowest level since the March. You have to go back to the March COVID shutdown. Go back even further here. So here's a March COVID shutdown. We're into that range right here. So there's not a lot of support through here, at least recently, for the sterling versus US dollar. So we have to sort of rely on our things like our hourly chart. And if we were to put a target or this low right here from last week's low, actually we moved back above that level at 117.15. So that's a little bit more, a victory for the buyers after the declines through here. Back almost near unchanged on the day. The price closed on Friday at 117.38, moved back above that level. We're currently trading at 11 and could see some more short covering up to the 100-hour moving average. Taking a look at the 5-minute chart, similar to, we've seen a move above the 100 and the 200 bar moving average, giving more of a bias to the upside. If we put a Fibonacci from the high price from Friday to the low price here, the 38.2 comes in at 117.44. It also happened to be a swing low here, swing high right here before moving to the downside during Friday's trade. So watch this 117.44 level on the top side for intraday clues. Keep the bullish bias going with the 100-hour moving average again as a potential target on the top side, 117.53 here. Those are levels in the sterling versus US dollar. Other currency pairs are following the dollar's moves. We're seeing the dollar Canada move to the downside, correcting back toward this what was a level of importance that I pointed out in our video on Friday. Broke above that level, now back down, testing it. We did dip a little bit below it, but trying to find some support buyers against it. The Aussie versus US dollar also made new lows here in the early session, and since is squeezing back up, watching the 100 and 200-hour moving average on the top side. So you have it, a quick look at some of the major currencies. I'll spend more detail on some posts at forexlive.com. Good fortune with your trading. Bye-bye now.